If you're staring at IRS Form 1040 and feeling lost, don't worry, you're not alone. Tax time might seem intimidating, but with a little help, it becomes much more manageable. Whether you're using tax software or filling it out by hand, understanding how to complete this form is key to filing with confidence and avoiding IRS issues. Let's break it down step by step, starting with the basics. Pushpin getting started. Personal info. The top of Form 1040 asks for your personal information: your full name, current address, social security number, your filing status, like single, married, filing jointly, and whether you have any dependents. It might seem simple, but double-check everything. Errors here can lead to long delays or even audits. For example, John, a single filer in 2024, fills in his name, address, and social security number, and selects single as his filing status. There's also a box about donating to the Presidential Election Campaign Fund. It's optional and won't affect your refund or tax owed. Moneybag reporting income. Now we move to the section where you report all money earned throughout the year. That includes wages, freelance income, side gigs, interest from bank accounts, investment earnings, and more. John has a W-2 from his employer that lists his wages. He also reports some taxable interest he earned from his savings account. Interest rates were a bit higher this year, so the total increased. If you worked multiple jobs or had freelance gigs, collect all your W-2s and 1099s. Leaving out income, accidentally or otherwise, can trigger IRS penalties. Chart decreasing. What about cryptocurrency? If you bought, sold, or traded any digital assets like Bitcoin or Ethereum in 2024, you'll need to report those transactions. The IRS is cracking down on crypto. John didn't deal with crypto, so he marked no and moved on. But if you were involved, even just once, report every transaction. The IRS considers digital asset activity taxable, and mistakes here can be costly. Family man, woman, girl dependents and deductions. Next, you'll deal with dependents. If you support someone financially, like a child, parent, or relative, they might qualify as your dependent. This can reduce your taxable income and unlock valuable credits. IRS rules for dependents are strict. Factors like age, relationship, and financial support all matter. John doesn't have dependents, so this section is easy for him. If you do, list them clearly, include their social security numbers, and check if you qualify for credits like the child tax credit. Bar chart total income and adjusted gross income, AGI. After entering all sources of income, add everything up to get your total income. Then subtract any adjustments to get your AGI. Adjustments might include student loan interest, IRA contributions, or tuition fees. John didn't have any adjustments, so his total income and AGI were the same. But for others, claiming adjustments can reduce your taxable income and your overall tax bill. Receipt standard deduction versus itemizing. One major decision: should you take the standard deduction or itemize? The standard deduction is a fixed amount based on your filing status. For 2024, these numbers are adjusted for inflation. Most taxpayers take the standard deduction because it's simple and often more beneficial. Itemizing involves listing out actual expenses, like medical bills, mortgage interest, and donations. You should itemize only if your expenses exceed the standard deduction. John reviewed his finances and found the standard deduction saved him more money. If you have significant qualifying expenses, itemizing might be better for you. Page facing up, calculating your tax bill. Now it's time to use your AGI and deduction amount to figure out your taxable income. Based on that, you use the IRS tax tables or tax software to calculate your income tax. Tax brackets change yearly, so always check the latest version. John calculated his tax using the correct bracket and moved on to the next step. Wrapped gift tax credits that save you money. Tax credits directly reduce the tax you owe. Popular credits include child tax credit, education credits, earned income tax credit, EITC, retirement savings contributions credit. John didn't qualify for any, but if you do, they can significantly lower your tax burden. Unlike deductions, which reduce your income, Credits reduce your actual tax bill dollar for dollar. Dollar banknote what you've already paid, withholding and estimates. Next, tally up what you've already paid the IRS through. Federal withholding, taken from each paycheck. Estimated tax payments, common for freelancers and business owners. John's W-2 showed that his employer withheld taxes each pay period. He also made estimated payments just to be safe. If you've worked multiple jobs, remember to total all withholdings from each job. Forgetting one can lead to unexpected tax bills. Chart increasing refund or payment due. Here's the moment of truth. After subtracting what you owe from what you've already paid, you'll see if you overpaid, you'll receive a refund. Underpaid, you'll need to pay the difference. John had paid more than what he owed, so he's getting a refund. He chose direct deposit, which is the fastest way to receive your money, usually within a couple of weeks. If you owe money, you can send a check, pay online, or set up a payment plan through the IRS if needed. Heavy check mark, final steps. Review and submit. Before sending in your return, double-check everything. Is your Social Security number correct? Did you enter all income? Are your deductions and credits valid? Did you sign and date the form? If you're mailing your return, use the right IRS address based on your state. If you're e-filing, most tax platforms guide you through the submission. Brain final thoughts. Keep it simple, stay smart. Form 1040 is the foundation of your tax return. Even if your situation is simple, like John's, taking time to understand the form helps prevent mistakes, delays, or audits. For more complex cases involving self-employment, crypto, or big deductions, consider using tax software or a tax pro. It's worth the peace of mind. Remember, taxes aren't just about paying, they're about planning. Know your numbers, keep good records, and take advantage of all the credits and deductions you're eligible for.